Welcome to Research Recap, our research series here on JPMorgan's Making Sense podcast channel. My name is Sam Azzarello, and I lead content strategy for global research here at JPMorgan. Today, I'm joined by Michael Feroli, our chief U.S. economist, to discuss the January jobs report. Mike, thanks so much for joining us on the podcast again.
Thanks for having me back.
Let's start with talking about your high-level observations from the report. I want to ask, is there nuance to this report, or was it just really strong and a blowout?
So it was a strong job report. We had 353,000 increase in employment last month. Now, there was some nuance to reading that number, as well as some of the details, but we did see the unemployment rate stay at a very low 3.7%. So I think that tells you that this remains a very tight labor market, and overall, it looks like things are starting off 2024 with pretty good momentum here.
Okay, then let's talk about wage growth. Average hourly earnings did jump. Can you walk us through the impact of that on inflation and what your view is on wage growth going forward?
Sure. So we had a 0.6 increase in average hourly earnings last month. We've been averaging about 3 or 0.4% most months recently. Now, that being said, there was some potential distortion here, which is we saw a big decline in the average work week. So what often happens in periods when you have bad weather is that salaried workers may work fewer hours, get paid the same, and so their average hourly earnings go up. So these two phenomena, the decline in the work week and the increase in the average hourly earnings, may be linked and may be due to some of the bad weather we had last month. That said, when you look at total nominal income or total payrolls, those grew at a pretty steady rate, and a rate that is something around 5% nominal labor income. So that still looks pretty good.
Interesting. So going forward, your projections, you and your team's view, what do you expect for the labor market?
So we do expect gradual cooling to continue. Obviously, we didn't have that in this most recent report, but we are looking for that to continue and for the labor market to gradually come into better balance, as it had been doing for most of the second half of last year.
And then we'll end where we always end, which is implications for the Fed. Does this change your view on Fed policy going forward and when we can expect a rate cut?
Sure. No, it actually probably makes us feel a little more comfortable in expecting our first cut in June. This week, Chair Powell kind of brushed off the possibility of a cut in March. We had before today thought there was a pretty good chance it could go as soon as May. Still think that's possible. There's a lot of time between now and May, but right now we're sticking with June and feeling okay about it.
Thanks, Mike, for joining us on Research Recap. Looking forward to talking to you again next month. And thank you to our listeners for tuning in. For more research insights, visit jpmorgan.com/research.
Thanks for listening to Research Recap. If you've enjoyed this conversation, we hope you'll review, rate, and subscribe to JPMorgan's Making Sense to stay on top of the latest industry news and trends. Available on Apple Podcasts, Spotify, Google Podcasts, and YouTube. This communication is provided for information purposes only. Please read JPMorgan research reports related to its contents for more information, including important disclosures. Copyright 2023, JPMorgan Chase & Co., all rights reserved.